Hi, I'm Peter Rose, founder of Longwood Currency Trading. Learning Forex needs to be presented in an organized manner, or you need to follow an organized program in order to correctly learn Forex. Today will be kind of a chatty video, travelogue with Peter. I'm going to go take my dog Bo out for a walk behind the house through the woods, and I'm going to take you with me, and we're going to talk about how you should learn to trade Forex. So Bo, are you ready? Bo. Bo is ready. All right, so this will be published the 2nd of May of 2024. It's starting to get warm around here in New England. We've had cold and rainy weather. In fact, it's in the 60s today, and it just got done raining a little bit, so off we go into the woods to take the Bo for a little stroll. So, trading, organize, what does that mean? The problem with learning Forex trading is you'll pick up a book or you'll get a course or something, and they'll try to teach you everything, because that's what you're paying them to do, right? To teach you everything. That's not what people pay me to do. What people will pay me to do is to teach them how to trade by teaching them less and focusing in on the stuff that's important and organizing that important stuff in a logical order, and then showing the interrelationships between each piece that we try to put together. The foundation of that training is based on what you've heard me speak of in the past, if you watched many of my videos, is what we call the life cycle of a currency pair. That's a rip on the software development life cycle that I used as a software engineer for 33 years, solving really complex problems. Sorry I can't look at the camera all the time, but this is the trail, and the last few storms that we had, as you can see in the area up there, we've had quite a bit of downed stuff on the ground. And I'm looking for my dog now. Where is he? Hey, Bo! Every time I come out here and I video, he hangs back because Sue isn't here. Come on, come on. We're going to walk down to the brook, okay? Come on. Oh, man. Yeah, the life cycle of a currency pair. You have to be solving the right problem when you're going to be learning how to do something. If you're trying to learn how to drive a car to get your driver's license for the first time, you're not going to learn in a tractor trailer. If you're going to learn how to trade currencies, you shouldn't be learning technical analysis or fundamental analysis, Bollinger Bands, compounding, or any of that stuff. Trading is pretty simple. When we're looking at undertaking a study of currency trading, we have to know what the problem is. What is the problem? The problem isn't the currency market. You're never going to be able to solve that. That's the most complex thing that there is out there. And look, I've got a degree in physics, almost a minor in math, did real estate investment for 40 years. I think I know complexity, and the currency market is the most complex of all the markets that are out there. So we have to back up from that. That can't be the problem that we're trying to solve. When I looked at that through the lens of a software engineer, I identified that the problem was the currency pair. That's what we're acting with. What is the currency pair other than two pair countries that have economic exchange going on between them through the interbank market that's out there, and it's order flow that creates the buy-sell price movement. The currency pair doesn't exist until somebody puts a buy order out and somebody puts a sell out. and then you create that exchange. That pair becomes active as an order. Well, that's a problem. The order, the creation of the order, when do you do it, how do you, all that stuff. But it all boils down to, how do you enter? We call that entry analysis. Position management. What do you do once you've got an active position running? And then how do you get out of it? Exit methodology. Entry analysis, position management, exit methodology. Those are the three problems that constitute the solution of the life cycle of a currency pair. That's what you got to solve. That's simple. You've taken a complex market, identified down the problem that you can solve in that market, and you've broken that problem up into three problems. Each of those problems has a rule that solves that problem. One rule. Each rule is, in software engineering, what we call conditional based. Conditions must occur in order for something to happen. It's better termed what we call an event response model, and I don't want to get into any of that. I do that in my courses in working with people, so it's simple to understand. But basically what we're trying to do is look at the crux of the problem and say, well, I'm trying to enter the position, for example, trying to make a decision whether I should enter. Well, what are the questions that you would ask yourself? What's the Fed going to do? Is the central bank of the country going to raise lower interest rates? What's the purchasing manager price index going to come out at Wednesday's meeting? Is it at the 200 period moving average? What are the conditions? So the conditions have to be simple, because the more conditions you have, the more permutations of decision that you have to make. If I have two conditions, then I really have four decisions I could make. I could make condition A, or I could make condition B, or I could make condition AB, or I could use condition BA. If I have 5 conditions, I'm going to have 325 different permutations that those 5 things can be arranged in. That's where the complexity comes from, by having too much stuff, learning too much stuff. So in my rule for entry analysis, for example, there's 3 major conditions with a minor corollary to one of those conditions. So three conditions, about 21 permutations if they weren't sequentially ordered. So the beauty of organizing a rule is not only having the rules themselves in some kind of sequential order, entry analysis, position management, and exit methodology, but the conditions of the rule need to be sequentially ordered. So I have condition A, which has to be met first. It's the primary one. I don't look at any other condition. This is the one that determines the bulk of the decision process as to whether I have an entry opportunity or not. The second rule, or the second condition, is based on that first condition. So they're sequential, they come in order, and you can't juxtapose them. Although the problem is, because of the way most people teach, even if they know what these simple things are, they don't know or understand the importance of the order, the sequential order to put them in. And that's why I can come down in the morning and open my trading platform, and as I've said many times, in 15 seconds I know whether I've got something of interest or not. And if there is something of interest, maybe a minute to go through those conditions and just take a general look at Well, you do some multiple time frame analysis so that you can say, well, over the course of the last 10 days, the price has been doing this, and over the course of the last 10 hours, it's been doing this, and so there's a probability that maybe it's going to continue to do that now because there doesn't seem to be anything else on the chart to indicate anything different. Now, you have to have a little bit of experience in order to fill in the blanks that I just laid out there, but that's okay. You don't need that experience in order to actually make the trade. You learn by trading, not by reading a frickin' book or waiting for the Bollinger Band RSI confluence to occur. If you want to make your life complicated, then take some of these courses that are out there where they're teaching you all this stuff without supporting that as to say this is the important stuff. Now, I do teach a lot of stuff when I'm working with someone through the manuals, but that's supported through the consulting that I do because my stuff is based on a one-on-one basis with the manual, simply support material. Whereas in most cases, the courses, the manual and the videos and all the other stuff, that's the main thing. Now, that takes a lot of my time, obviously, and I'm retired, and I don't want to I don't want to try to convince people to take courses and try to drag them across the finish line and convince them that life is good and everything is going along fine. And that's why the courses are, and the consulting is expensive. I mean, look, if you're not looking to make $60,000 a year from your trading or replace your job income, I'm probably not the person that you're going to want to take classes from or courses from or have consulting with. I'm not interested in teaching how to take a $500 account and turn it into a $1,000 account. You're wasting your time learning how to do that because you're learning bad habits. And I'm not going to get into any of that. That's the stuff that I do my consulting with people when I talk to them on a video chat before we decide that we're going to take the person on as a student. You have to go through a qualification process, and if you think that all you're going to want to do is trade $3,000 account because that's all the money that you have in the world and that's as far ahead in life that you can think, you think you're going to take your $3,000 at 501 and run that to $30,000. I can't help you. I can't help you. However, I can show you how to make $60,000 a year, $100,000 a year, $200,000 a year. What do you want to do? I'm not interested in showing you how to pay your light bill, making $200 a month. It's not worth your money, and certainly not worth my time to try to show you what you can do with your $2,000 account. If $2,000 or $3,000 is all you have, I'm happy to get you started, but you have to understand that I'm teaching you a skill that as soon as you get that figured out, you'll be able to make $60,000, $100,000 a year. You won't do it on a $3,000 account. If you look at learning how to drive a car, you're not going to go out there after 2 lessons and take your beat up Chevy and go down to the racetrack and try to run that thing around and race it. You don't have the skill for it, and the car isn't capable of doing that. So you don't have the skill right away to make $60,000, and you don't have a large enough bank where a reasonable percentage return against that bank will allow you to make $60,000 a year. And maybe you don't even make $60,000 a year now. Maybe $10,000 a year is what you need. You got Social Security and you're making, or you know that your Social Security isn't going to be that high, and so you're looking for a way to augment that Social Security. $10,000 would be great. Well, okay, you got to dip into your savings and have an account that's large enough in order to generate a reasonable amount of money that's a percentage of whatever amount of money that you're going to be making from your Social Security or you're going to be making from your current job. You have to balance things reasonably so that if I work with you, we can get you on the right track. As to looking logically and trading for pips and not dollars, because once you learn how to trade, then the dollars will be as much as your bank can afford. But you have to convince yourself of that. It's very difficult to do that from all these guys that are out there. Oh, here's my $500 course or $3,000 course or whatever it is, and we're going to show you all this stuff, and it's you know, you're going to do this, draw these magic lines on there, and when it does this, you're going to go in, and then you know, I made $40,000 on this trade. Well, yeah, you're trading a $600,000 account. You're trading, you know, a lot of lots. You're trading 60 lots, 600 bucks a pip. Okay. Please, when you're looking at when you're looking at learning and studying these great markets, look at an organized manner of approaching the solution of the problem that you're really trying to solve. And I think that things will work out a lot better for you than just taking somebody's course or reading a book and trying to figure it out yourself. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.